Let's bring in our first guest this morning. We have Phil Streible. He's joining us, the Chief Market Strategist from Blue Line Capital. Phil, good to have you with us. Well, a lot of focus recently on crude products, and I want to get your thoughts on the WTI and the Brent. The WTI recently is 63 in just a minute, but first and foremost, it seems like RBOB, it seems like gasoline futures is the one leading the way higher today.
Yeah, it is. And gasoline's been leading for the last quarter. I mean, you look, it's up over 50%. It's really a reopening play. Number of vaccinations continues to increase. Number of people start to get mobile. You start to see people talk about airlines, cruise ships, leisure stocks, travel everywhere. So gasoline demand is definitely on the up and up. And what you can look at is that crack spread. It's at a 9-month high. And if that's what's supporting the oil market. They're cracking the oil. They're creating other byproducts like gasoline, like bunker fuel, heating oil, all these things that are necessary in order to not only increase travel, but also increase shipping.
So, you know, I was talking at the top of the show about some of the comments from Fed Chair Jerome Powell, and I'd love to get your thoughts on that as well. But one of the things that stood out is he said yields on the rise. In a way, it's a statement of confidence on the part of the market that will have a robust and ultimately complete recovery. One could argue that, well, these being futures products, whether you're talking the WTI or the RBOB, the gasoline, you could argue that's a reflection thereof as well, of that statement of confidence, as he said. But this is also based on some concrete data. I mean, more cars on the road, ultimately, higher prices at the pump.
Economic data is going to continue to increase, and it's going to continue to increase at a rate of change that's going to be actually alarming. So we're going to see this like year over year change, not only in like GDP, but inflation data. And that's what's driving those rates higher, the inflation play higher. You look at all the commodities across the board, everything from lumber, bean oil, sugar. These are all at multi-year highs, copper through $4. I mean, all this stuff really supports the thesis. And it's hilarious that he's saying that, you know, they're going to hold rates at this lower end for an extended period of time. But the reality is that the back end, the 10-year, the 30-year, they're going through the roof. I'm in the process of buying a house in Florida, and I looked at locking in my 30-year rate. I was like, holy cow, I'm not getting a deal at all. This thing's gone through the roof.
Yeah, I'm in the process of refinancing right now, and I always feel like I'm going to get the call. It's been an ongoing process. I feel like they're going to call me and say, hey, that rate that we offered you 3 weeks ago no longer available. This process has been taking a little bit longer than we thought. I'm sure a lot of people are in that same position right now, and that's what we focus a lot on here, is the impact not only in terms of just price activity rates on the rise, but the ripple effect that creates. Let's talk crude oil. Inventory is probably a bit more of a focal point this week than it was last week. The real focus was the energy crisis in Texas, but I was a bit surprised to see the build in inventories from the API, and it looks like the EIA, they're looking for a bit draw today of about 5.8, I think.
That shows you the sheer strength that's in the crude oil market right now, and the people that are trying to buy in and lock and realize that energy is that reopening play. You get a build of 1 million barrels, the price drops immediately, and then we come in the next morning and prices are breaking out to the upside continuously. So it shows you that any drawdown is really meant, or any build is really meant to be bought for the time being. We'll probably see that drawdown. We're actually expecting a higher number, right around like 6 million barrels. And, you know, that's what can thrust oil up. I think a realistic call, like $70 to $75 on crude oil in the next 4 months it's not out of the question by any means.
Yeah, I saw Goldman calling for $75. I think it was yesterday. I saw a headline come across the wire. I wanted to get your thoughts on copper, because we're talking about energy as being a reflection of, again, some of that, well, as Fed Chair called it, statement of confidence. I mean, clearly copper on the rise up into that 420, I think 425 area now is a statement of confidence as well. Expectations for demand to continue to play out, and ultimately one could argue that supply shortages are impacting price as well.
Yeah, China really went after all the available supply that was out there. The social distancing that took place in the mines had created some supply constraints. We saw the people starting to move around as far as relocating, a lot of demand just on the physical side. And what it did was that was the best play. If you look at the pandemic lows in the bottom back last March, we're up like 110% price-wise since that time. So, you know, there's no telling how high it's going to go. It's going to continuously face this bid until, you know, we see probably the back half of the year. That's where we think that things are going to kind of stall out and start to slow down. So a lot of these commodities, you know, if you miss the boat in copper, you can look at other ones that are out there, other metals and other rare earths, and that's where your next play is going to be.
Let's talk about stalling out, because I guess I'm wondering here, with commodities on the rise like this, can we see this type of price activity sustained in terms of the indices? I mean, ultimately, once we're talking about commodities reaching a certain point, I mean, that fear of inflation starts to become a bit more real. Ultimately, in theory, that could be the next headwind for U.S. indices.
Oh, it's going to be a bubble in the equities, but the bubble is just going to keep getting bigger and bigger and bigger. You could see, look at it, it's hilarious that people were talking about like the market selling off so hard yesterday. And I was like, you want to see a sell-off? You want to see real coverage of a sell-off? You pull up Ben when the flash crash.
Yeah, I like
YouTube, and you listen to that. That's a real sell-off there. That's panic. This yesterday, it was a joke. It was a buying opportunity. Yeah. You had a minor setback, and it was hilarious that 2 days later and a day later, we're back up and we're breaking back out to the upside. You're going to see equities should go up, make a new high, and there'll be a FOMO of all the people that panicked out in the last 2 days. They're going to get back in and they're going to buy those, and that's what's going to propel it even higher.
Yeah, I've been talking a lot about how we can pull up this chart here as I make this point here. The ES holding well above the 200-day moving average. We've been talking about these sell-offs that we've seen intraday. Everybody gets all worked up about them, but I keep saying take those Chicken Little costumes, put them back in the closet, because if you start running around in the cul-de-sac, your neighbors are just going to think you're crazy. These have been and continue to be buying opportunities. The sky's not falling at this point. I did want to get your thoughts on copper, though, and the move up that we've been seeing again, 425. Tying back to the inflation narrative in terms of the indices, and where does this stand as far as, well, Bitcoin ultimately, Phil? I mean, I know it's a product that you keep your eye on as well. It's been rallying. And speaking of, I mean, we saw a big move down recently. Everybody was saying the sky's falling and this is the end, the top's in, and then all of a sudden it comes right back. I mean, these are products that have been resilient. They're trending higher, and ultimately those that have been participating on the long side have benefited. Those that are participating on the short side have had to be very fast.
Yeah, I was never really a true believer on Bitcoin. I mean, I see what the process is behind it, what people are thinking. It is something that you need to have some exposure to in some small way, like a 2 to 4% allocation, 4% being your max allocation, using that correction we saw yesterday to purchase some. I do get a little bit weary when it falls. If people call it a currency and it fell 15% yesterday. I mean, we can't have, if the US dollar fell 15%, oh my God, people would be, it'd be crazy. You go to the gas pump and they'd be putting $6.50 up there on the little bulletin. So what does concern me is if companies, like specifically within the NASDAQ, allocate a large portion of their cash balance to Bitcoin, Bitcoin does have a correction, then you're going to see those companies are going to correct, and that could weigh in on the equity indices, like we saw with like Tesla, PayPal, Square, things
Overstock,
like that.
another example?
Yeah, so I do get really concerned with like, hey, me being long NASDAQ, is that actually a play on Bitcoin? Am I now overweighted on Bitcoin? So I do become concerned on that. People really need to look into their portfolio at what these companies are specifically holding for assets. But it seems that, now that the exchanges launch those Ethereum contracts, there is a lot of people that are going after that.